And so, it starts with pattern recognition. And, for us, we look for 5 to 7 factors, and only when those factors come together, right, they're aligned, they're in confluence, do you ever place a trade, right? Do you ever enter? So it's very similar to real estate in that sense, right? In real estate, you're always talking about timing and location, right?
Do I see myself as a marketer or a business person? That's actually a really interesting question because, I mean, at the source of all truth of businesses, marketing is at the head, right? I mean, you look at Elon Musk. Elon Musk is not turning screwdrivers on the rocket ship. He probably doesn't know half of the programs that are inside, Tesla, but he's a hell of a marketer. And his marketing is to raise capital with his investors, and his marketing, obviously, awareness for his businesses and to find new business opportunities. So I think to be an effective business person, you probably, I would think, need to start off being an effective marketer first. So I would say marketer first and business second, I would think, because I'm always looking for things. And the funny thing is sometimes I'm looking for the things that I'm not looking for. And then they just show up. I think too many times people want to run a business and they sit in their basement and they just hope business is going to show up. It's like, no, you got to get out there and you got to find people. You got to get there and talk to people. Gary Keller says, get belly. Grant Cardone says, massive imperfect action beats perfect planning. And he believes marketing is senior to sales, which I also agree with.
That's why I was curious what your take was on that. Because since being involved with 10X and getting those marketing commandments down, it's like, it's like a hit on the head. Like, hey, you got to really shift your mindset to paying a lot of attention to marketing first, right?
Yeah, I think so. And the thing is sales is you're looking for, I think, a specific outcome. Marketing, I think there's certain level of marketing where you're looking for a specific outcome, but other times it's just you're looking for reach. I think Robert Kiyosaki was asked, do you want to have $1 million or a million followers on Instagram? He's like, 1 million followers all day, every day. And so, because you need eyeballs. I think Grant is one who actually said, it's not about the people it's about the people who know you. And that's an important thing to think about, because the more that I think you can get people to know, the more people know you and who you are, the more opportunities are going to just fall on your plate, and the ones that you might ask for and the ones you might not ask for.
I actually, I see where you're going with the Robert Kiyosaki quote, but in a way, isn't that funny? Because you can also have followers without monetization. So if I was in that position, I would say I'll take the million, but see what I do now with the million is more important, right? Are you?
Yeah, that's,
you know what I mean?
Yeah,
are you going to grow the capital, or are you going to put it towards consumer debt, right? So I would say take the million and invest it, because obviously that's also our industry, right?
Well, and you make a really good point, is that, when you talk about followers, it's capital. Now, is it fiat, crappy currency that you can't spend, or is it something that has tangible value? Like, if those million people are like raving fans and think that you're like the next coming of the next business guru, and they're going to, follow you into the fold, that's different than a bunch of bots out of, some.
That's what I'm saying.
Whatever.
Yeah. That's what I'm.
People
they have to be real. They have to be real. Because even Grant said, hey, just because I have followers doesn't mean that they buy from me.
That's right. Yeah, exactly. And that's the intentionality, I think, around marketing. And, when you're marketing and you're looking for analytics, I think if you can, track an specific outcome, I would almost put that almost in the sales category. Where marketing and sales, it's right at that connection point, because you're, Grant and Russell Brunson and, they're really great at funnels. And so, they build out a funnel, and the purpose of the funnel, they got every analytic under the sun so that they know, is this a profitable funnel or not? And so that marketing has a direct outcome. Then there's the indirect marketing, where there is no outcome, required. You're just out there creating inertia and hoping that something kind of comes back. I mean, Coca-Cola, when they put a sign on the, on the billboard, they're not thinking that you're going to immediately run out and go, man, am I ever thirsty? I'm going to go buy a Coke right now. But what they're doing is they're just creating awareness that at that moment that you are thirsty, you're going to think about that.
Top of mind, yeah.
And it's a top of mind thing. The difference is when you look at investing, and this is why a conversation with you is interesting, is around the idea of, if I had $1 million, which is a Bare Naked Ladies song, if I had $1 million, I would buy, and you can finish that sentence.
Well, for me, I would reinvest back into our traders that are competent within the firm, specifically trading futures and commodities, right? And so for those of you that maybe not be as familiar, futures and commodities is the bona fide asset class that's actually created a lot of billionaires, at a much faster rate than, say, real estate would, on average about 30 years. Now, the difference here is that, it's the reason why it's achievable is because you have to know how to navigate the risk and volatility. As compared to all the other asset classes, the reason why it's so lucrative is because it has higher risk as well. So, I mean, that some people, depending on how risk adverse or, what your risk appetite is, it may be very off-putting. But, I think for those that have a system, right, or you see you understand what the process is and it makes sense, then, always invest in things that you understand, right? So for me, that's obviously the thing that I understand.
Well, and let's break that out, because I think a lot of people don't really, when you say futures, they think of Marty McFly and a flux capacitor. When you say commodities, they think of steel, wool, and milk or whatever. Let's start to define some terms so people can get an awareness of what that means.
Yeah. So I'll just keep things very, very simple. I think that's also the true mark of a professional. That's what we always talk about at the firm, because there's a lot of technical jargon, right? But how does someone, who's a layman get educated? So in the sense, you have traditional assets like real estate, stocks, bonds, mutual funds, even college is your formal education, right? That's a form of investment. So where we specifically reside in is within alternative investments, right? Derivatives. So you've got futures and commodities as the top most lucrative, followed by stock options. Then you have cryptocurrencies, foreign exchange, right? Forex, art, and luxury timepieces, right? So futures and commodities is at the top. If you look at bona fide giants in our field, like John Arnold, and James Simmons, these are billionaires that have created their wealth alongside the, world's top 42% on Forbes that actually do this for a living. But, the thing is, like I said, it's a bit more risky and a bit more, I would say, aggressive in terms of how you invest. But if you know what you're doing, right, you can literally leverage the global financial markets like your own ATM machine.
So again, let's again bring it down to the very simple person. So they're sitting there, they've got their Questrade account open, and they're like, I want to go look for futures. I want to go look for commodities. Are they operating in their Questrade? Or are they, like, if they're wanting to be the do-it-yourselfer kind of a person, what are they doing?
Yeah. Well, so if you're going to be a do-it-yourself person, first and foremost, is you got to understand why the markets move and how they move from a technical standpoint, because that's basically how futures and commodities, right, in terms of actually generating wealth, like that's the number one skill set that you got to have. So Warren Buffett, right, he's a billionaire that created his wealth through long-term investing, value investing. Now, in this specific case, you engage in what we call fundamental analysis, right? Because you got to research the company, you got to research the CEO, you got to research the trajectory of that firm, quarterly earnings, right? And if you think that it is a good bet, right, you purchase shares of that stock, right? But you're not in direct control of that company or the trajectory, right? You're just saying, from research and due diligence, I think this is going to happen. So it's more long-term, right? And like I said, value investing. The difference here is, right, similar for a medical professional that is able to diagnose X-rays, CT scans, and MRI scans the right way. When you diagnose these charts, the difference is they can print money instantaneously into your trading account, right? And so, it starts with pattern recognition. And, for us, we look for 5 to 7 factors, and only when those factors come together, right, they're aligned, they're in confluence, do you ever place a trade, right? Do you ever enter? So it's very similar to real estate in that sense, right? In real estate, you're always talking about timing and location, right? Except this is not physical. This is timing and location on an actual chart, right? And so if you can learn those basic things, obviously, there's certain proprietary indicators that once you're, inside the industry, if you know how to leverage them, right, they help a lot more. I mean, we have those 5 to 7 indicators for a reason. But that's, the basics of it, right? Is if you were
so I'm sitting in my Questrade account, and I'm looking at going, okay, I love this. I've done the research on this Acme company, and Acme looks great. The stock's right now running at, I don't know, $400, stock or whatever. And where does the future come into play? Is it I'm buying it at today's value? Am I buying it at future value? What am I buying it at?
So yeah, so that's a great point. So that's actually right a huge difference. What you're talking about is fundamental analysis with stock, right? And so again, where we are is futures and commodities. So there's going to be charts. So really it's about reading how the markets move. What you have to understand is the way that we make money is we make money on the oscillations. So let's say you were to just imagine this is a graph, you have ups and downs, right? If you were to buy a stock and you held it all this time, right, you basically make nothing because the line is flat. You do not make money when the market's flat, right? Right? So what I'm saying is in futures, it looks like this, right? And we make money off of the movements. Now, what I'm saying is specifically here, how you read the movements, right, from a technical basis, that is how you make the money, right?
So are we looking at companies? Are we looking at...
No, you're not looking at companies.
We're looking at commodities at this point.
You're literally, you're trading futures or commodities, but you're really just looking at how the chart moves. And you're trying to determine, right, from what you're seeing, is the market going to go up, down, or sideways? And if you can essentially, from your diagnosis, be on the same direction as the markets, you make money. It's that simple. And the beautiful thing about futures and commodities, right, is that you can make money, right? Not only can you make the money when the markets go up, down, or sideways, but as a matter of fact, when it goes down, it tends to go down 67% faster than when it goes up. And this is the really interesting part, because typically speaking, when you buy a stock, most people are like, it went up 2%, 3%, and you can only make money when the markets go up, because that's when the values of your shares increases, and that's when you see a profit. But what I'm trying to express to you is you can make money when the market goes down, right, in futures. And so, for example, back in 2008, when the markets were to collapse and most people would freak out, like, let's say, Steve, you had $1 million tied to that market, and, the market collapsed, the $1 million valuation of your shares would also collapse, right? But in futures, if you actually just hit the sell button right when it started collapsing or during the collapse, as long as you're in the trade and the market's still going down, whatever contract you're in accordingly to the volume, basically, right, and the points that you cleared, that's how much money that you can make.
Okay. So on the down, and that would be very similar to just trading a stock where you're buying on the down rather than buying on the up. You're just buying on the spread.
Well, then, so if you're talking about spreads, then you're talking about stock options, right? You're talking about like calls and puts. And that's why, stock options is the secondary most lucrative asset class within alternative investments and derivatives, right? Because it can create a lot of millionaires. For that exact reason that we're talking about. You can make money when the markets go up, down, or sideways. It just doesn't move as fast or as much as it does with futures, right? So you have to realize, so the brokerage that we recommend, right, you don't have to put down $12,000. Right? It's a $500 margin to trade the Dow US 30, right? So we trade the indexes, right? The Dow Jones US 30 index, or they call it the E-mini markets. But what I'm saying is the brokerage that we utilize is only $500 to get in. Would you want to pay $12,000 or $500 to get in a trade?
So your minimum trade for somebody is $500.
Yes, for one contract.
So it's like, do I feel like going to Vegas next week? So I could either put it on black or put it on a commodity.
Yeah, you can think about it like that. But the difference is, right,
see what happens.
With commodities, it's not a see what you happens thing. It's, how honed are you with your skill sets? Because now if you know what you're doing, right, you can actually take that $500 and you can literally triple it within minutes, minimally speaking. So how can you do that? Well, it's really simple, right? So let's talk about inputs, because money is a byproduct of the right inputs, right? 1 point on the Dow US 30 is $5. So if you can clear 100 points, Steve, off of one contract, that is a $500 day.
Yep.
So if
now it's $500 up or down, is what you're saying.
That's not, no, points. If you made 100 points.
Sorry, 500 points up or 500 points down.
Well, if you made 100 points, let's say 50 points up, 50 points down, that's 100 points total.
I see.
So if you made 100 points, I'm just saying points in general, you make $500 that day. And that's one contract. What if you get better and better and you start increasing the contract sizes to 10, right? And, so you go from 1 to 3, now to 5, then 7, now and you're at 10 and you clear 100 points. That's no longer $500. That's now a $5,000 day. See what I mean? So the game is a commensurate to the ratios that you're dealing with. But at the beginning, right, you want to just make sure you master that one contract. And so what I'm saying is if you cleared, 300 points, that's a $1,500 day, right? You see what I'm saying? So it's about the points that you can extract, and then the money gets made in accordance to those points.
Yeah. Interesting. Yeah. One thing I've always, to be very fair, I've been very much like Grant in the sense of I've never really spent a lot of time in this section of the world. I think only recently on this last GrowthCon is he really started to dive into it a little bit more. He said that on the stage.
Yes.
And that's Grant Cardone, guys. And so, for me, I did 1 year where I put a small amount of money into the stock market and I made like maybe 15% on the money. But the amount of time that I spent, I just felt like I would have had to put a lot more capital at risk in order to make the decision. And I felt my knowledge wasn't there. I had a buddy of mine I just met with last night. I haven't seen him he had trained jiu-jitsu with him. He moved into Halifax in Canada, and I hadn't seen him for probably 3 or 4 years. And he sold his house at the height of the market, moved out to Halifax, lived basically free, just decided to pick up, trading and stuff. And, he made, in a month or two, he made 400,000 on trading. And, I thought that was pretty good. And I thought, okay, well, the difference between him and me is that he really dived into it. He really dove in deep, had the time, spent the time, then it didn't feel like risk to him because he had the knowledge. And I think, that's where people who are looking in this space is saying, okay, well, how do I get that knowledge, to be able to make that comfort?
Yeah. Knowledge, systems, and processes, right? So, and that's what we actually pride ourselves in the firm that we run, right? At the end of the day, even though we do manage money first and foremost for high net worth individuals, we're doers who happens to educate, right? So for those listening, if you're curious how you can actually see this done at a high level, right? We actually teach you at night for an hour, but in the mornings, we prove what we teach just for half an hour. We go live and we clear a minimum of someone's annual salary in front of you, right? I'm talking about 50K live as the lowest, but on average, you can see anywhere between 100 to 150K. And that's
what you're trading on that.
Yeah. And I'm talking about a consistent basis, right? You come any Tuesday or Thursday mornings, that's what our guarantee is. If you don't see us make at least 50K in front of your eyes, you can feel free to never talk to us again. And the reason, again, Steve, is because we're doers, right? Who happens to educate. So we do this on a daily basis, managing money for our clients, first and foremost.
I just recorded a podcast yesterday, and I love podcasting, guys, because you get to have great conversations with really good people. If you want to go out there and really get to know some other people in the world that you've never thought possible. I mean, look, Philip and I, we actually are in the 10X community together.
Yes, we are.
We bumped into each other, but we didn't bump each other in the 10X. We bumped each other just from podcasting.
That's right.
And we're like, wow, this is amazing. And so we were able to connect. And so, guys, if you want to get out and get amazing people like Philip, get out and start podcasting. And if you need help with that, go to podcastlaunch.ai and we'll definitely help you out. Now, Philip, when I was talking with this other fellow, the one thing that you really brought a good point up is around the idea of doers and learning from doers.
Yes.
And we were talking about this other day is the idea of the experiential versus the theoretical. And one of the things that we really kind of came to a conclusion of is you got to have both, because if you got the experiential, but you really don't realize what you're going through, versus you got the experiential with the theoretical. And now you kind of blended you put a third thing is successful experiential. and I think that's also extremely important as well when you're looking at an outcome driven experience and saying, look, we're going to not only just show you how, we're going to show you as we're doing it.
That's right.
And I think that's a really important thing.
But I think, wouldn't you want a mentor that's actually successful? If you're going to go to a source for the purpose of getting compressed time, knowledge, and acceleration in your journey, right? Why would you not go after someone that, has not only been doing it, but been successful, right? Because that's the whole point is to,
Yeah, absolutely.
you know what I mean?
And there's people who are successful in doing it. There's the people who are successful in coaching. Going back to Brazilian Jiu-Jitsu, John Danaher, he never really won any major tournaments, was never had any accolades on the major stages, but he's coached some of the most high-level people like George St. Pierre, Gordon Ryan, Gary Tonin, Nicholas Mergali. And these are the people who are at the top, even Craig Jones. He's coached all of them. Nicky Rod, he's coached everybody who's the highest level of the highest level. And yet he's never won a tournament, but he's so technically aware that he can see success through other people.
Yeah. I mean, the most important thing is, can the person receiving the information, have tangible results.
Yep.
Right. So it's two parts, right? You want to be able to learn from someone that is successful, but you also want to make sure that there is a transference in place, right? A robust bridge for the practitioner to actually teach you so you can learn the skill sets, right? Maybe in that case, the case that you're mentioning is that the transference, was there, even though maybe the actual practitioner side of things was not as strong, but hey, he's able to get his clients results. So, right.
Yeah, exactly. And I think the bridge is a really good addition to this theory that I'm building out. One thing that I'm really looking through is the idea of taking somebody from nothing to excellence and what's required to do that. And so it's a whole thought process I'm going through. So I think that the addition of really talking about this stability in that bridge, and a bridge, in a physical form requires 2 points of strength. And I think that's really important when you're looking at learning, is that the person who's giving can be a strong point, but the person who's receiving has got to be a strong point too. And if John Danaher went and did all those training with, Joe Schlepp, who didn't have the same focus as somebody like George St. Pierre, it probably wouldn't have had the same outcome. Well, but because he had a strong landing on the other side of the bridge,
I think I think 100% integral in all kinds of successful mentorship-mentee relationship. It's like, you can have Phil Jackson, right? But if Michael Jordan was not willing to go hit the gym every day, then how are you going to get better? You know what I mean? So a two-way street for sure has to be in place.
Yeah. Yeah. What's the bridge? It's got 2 solid points of contact.
But that's why for our educational program, it's not like we take everyone, because we really want to make sure that we filter, and be able to transfer the skill set to the right person who is committed, who has the right reasons to do this, so that we can really pour into them,
So, yeah, and that makes total sense. So getting back to kind of focusing a little bit on the meat itself, looking at trends, like what sort of trends are you seeing, like this year versus last year? Are you seeing anything that's really, really popping out right now?
Well, I think in general, the markets are always going to have its ups and downs, right? So like, for example, coming out of January in our space, there's a thing called the January phenomenon. It's called the January effect. So, usually speaking, January through March, April, you're going to see the most amount of volatilities. The reason for that is because traders, we usually don't have salaries, right? So when the beginning of the year happens again, it's like everyone's back from vacation, holidays, like you start anew, right? So the reason why you're able to make the money you can in futures is because of participation. If you do not have participation, you do not have movements in the market, right? It's like when you go to the casino at the roulette table, if there's no one playing with you, right? So it's that same concept. So you get the most amount of participation, in these couple of months, right? And when I say, the volatility is usually the highest, that means that the markets are prone to be moving a couple hundred points a day. And if you know how to extract those points, then voila, you can make that money in half an hour to an hour and a half, right? That's how much we work when we trade. Because, this style of trading is short-term investing, high frequency trading, so to speak, right? So again, a little bit different than your typical long-term investing, value investing, right? We're not holding anything overnight, right? The longest trade for us may just be a couple of minutes, right? And that's the difference. So, trend-wise, that's definitely always there, and it's proven to be true. You kind of look at how the markets have swung up and down.
How much do you see things like AI changing the way the futures are done right now?
Well, I don't necessarily want to say it will change the future, more so how it will enhance the efficacies and efficiencies of trading. What I mean by that is, how accurate can you get an algorithm to basically mimic that of the, human trader who is a masterful trader, right? That's actually something that we have been developing internally, but a really successful pioneer in our field is James Simmons, right? Passed away last year, at age 86 in May with a net worth of $30 billion, like 30.3. But the most interesting thing, Steve, is that with him, he did not take the entire lifetime to amass that kind of wealth. It only took him about 15, 16 years as he started in his late 60s. But he was the pioneer in our field that figured out automated software trading across multiple markets. So in surgery terms, because that's where I came from, right? In surgery terms, it's like being able to build a robotic surgeon that can actually operate on multiple patients and multiple OR rooms. Because when you're a phenomenal, hands-on surgeon, no matter how great you are, you're limited to that one OR room, that one patient, right? And that's kind of like what John Arnold did. John Arnold took 1.5 million to 1.5 billion in 2.5 years, getting the commodity natural gas the right way. But the thing is, once he became a billionaire, he went into philanthropy, and he kind of stopped. People were saying that, if he would have kept going, he would have eclipsed Warren Buffett at the rate that he was going. So how I see AI affecting the landscape is like, how do you make it more, I would say, hands off? You know what I mean? How do you make it a little bit more passive? We have a resource that we utilize that basically gets us a minimum of 10% a month, right? Very, very, it's our most conservative strategy with stock options. And, we're looking to build our own version of an automated software that can, really bring it to life, right? But that's kind of what I would say. It doesn't really change the landscape, more so enhance the capacity for hands-off styles of trading.
So when you look at the trading, you mentioned the fellow with the natural gas commodities.
Yeah, John Arnold. Yep.
Yeah. There's a lot of different commodities to take a look at. What are some that people should pay attention to?
Well, I mean, gold and oil, usually markets that move well, but you have to realize, like, different markets, Steve, they require different margins. I talked about the Dow US 30 and how you only need $500, right, to go in. Like, do not trade cotton. The reason is, right, cotton's soft and fluffy, but it'll kill you because it moves like every cent is like $5,000.
So is it bad?
It's not. Well, you can find out on your own. But what I'm saying is, if you make a bad move on cotton, I mean, you're down like 5 figures immediately. Like I said, it moves $5,000 per cent for like 10 cents, right? Think about that. So if you're right, then yeah, but if it goes against you, dude, you're down like 15, 20 grand easy, just like that.
Are you trading any Wagyu beef? Just wondering.
No.
Asking for my son.
No. We don't. Well, I more so eat the Wagyu. Yeah. So yeah, I mean, gold and oil specifically within commodities are really good. In terms of the futures market, just so you understand, the futures is Dow US 30, right? The Dow Jones, Russell 2000, the Nasdaq. So we like to trade the Dow and the Nasdaq the most. Your ES, which is the S&P 500, as well as your other markets that you can choose from. But those are like the main ones, the main 5.
And so when you're getting into it, what would you say somebody's first major step should be if they're looking into the commodity sector and maybe looking at gold? What are some key things that they should be looking? I mean, gold gets talked about all the time.
Well, I think you need to make sure you identify the right brokerage. That's number one, to get the most amount of leverage, So what I would say is you got to have the right leverage to even get in. Because like I said, if you don't even know what brokerage to use, you could be putting down, like on a really popular brokerage known as Interactive Brokerage, it will show up as one of the first ones when you type it in on Google. To trade gold and oil respectively, it's $17,000 and $24,000, right? Versus the brokerage that we recommend, right, and personally use, it's $1,000 and $2,000. So would you rather enter the market at 1 or 2 versus 17 and 24?
Yeah, I guess it depends on the type of investor you are, but yeah, I could see what you're saying.
You know what I mean? Well, I mean, it's a 17 or 24x delta, right? You know, it's like, hey, Steve, I got a real estate project for you to look at. If you want to get in on it, the down payment is $1,000 first and $2,000 versus 17 and 24,000 on the same property, right? You know what I mean?
Yeah. Okay. On the same property. I can see.
Yeah. On the same property. It just depends on who the brokerage you go through, right? So number one is the right brokerage, you know, and then number two is once you have the right brokerage, then you got to really know what are you looking for, right? What are the setups that you're familiar with? Because in trading, if you do not understand what's happening, it basically is gambling. And that's really key.
Yeah.
So, you know.
That's what I felt like when I was doing it for that year. I'm like really pretending I'm chat GPTing things, and I'm just trying to figure out, you know, is this the right move? And some of it would be, this is like a roll of the dice or whatever. And then other ones were the stable coin style thing. But it didn't feel like when I invest in a business or I invest in, you know, a marketing endeavor.
Because it's intangible. It's not something that you can really like hold on to, right? It's the markets. But that's kind of the benefit too. You talk about businesses. I mean, this is the 90% margin game, because the only overhead that you have is your internet connection, your electricity bill, you know, your computer, and that there's your setup, right? In most other businesses, you're talking about, you know, brick and mortars, construction, landscaping, those margins are like,
you're not going to mow your lawn then where you live, or
10 to 20% margin, you know, depending on where you are. It's crazy.
I think the landscaping should be included as your tax write-off. I'm just saying.
Yeah, sure. That's yeah. You know, it's so funny, right? People always ask me about the tax implications of trading. And it's like, I'm glad that you're concerned. We can have a conversation about that. But you really don't need to be concerned about that until you're at least 50K in profits. Because that's really when you can say you have a bona fide business that's generated. It's like, because business and romance is pretty similar, right? It's like, you wouldn't, when you first meet a girl, you wouldn't ask them, hey, what are your plans for the honeymoon, right? That's kind of like what I think about when I think about tax here. It's like, I'm glad you're thinking about that, but like, can you be consistently profitable? Can you extract points, right? Can you identify certain things? Then you go, yep, I know I can make money here for a fact, right? So those are the most important things, is that this, and also clarity on your risk management. Like, do you know exactly when you go in every day, what are you willing to risk and how much are you anticipating to be the reward? You know, are you going to adhere to a 1-to-3 risk to reward ratio, 1-to-5? In our case, right, we're at 1-to-10, but obviously you don't want to start there, right? So we're risking, for each 10 points that we risk, we're aiming to make 100. So we're risking $50 to make $500. But, someone who's a beginner, you may only want to risk $50 to make 150 points, or sorry, $50 to make $150, right? You see what I mean? So
that's just like a shorter band of
change. Yeah. So
yeah.
In that case, you're risking 10 points to make 30 points, right? Because you're just starting. You don't want to, put yourself in. I mean, it's like, if you see that you're in profit, you should probably take the profit, right? A healthy one. And then wait until something else makes sense, right? Because the markets are moving doesn't mean that you have to do something. You know what I mean? Like the whole idea of how we approach the market is making sure that we are able to identify the right opportunity and then you pounce on it, so you're not just like trading like a maniac like this, right? You're actually, deciphering, dissecting what's in front of you. And then, like I said, right, diagnosing the charts the right way so that when something makes sense that comes your way, you enter in the trade, you pounce on it.
So let's focus on the gold for a second. If there was two things that people should be looking for when they're looking at gold, two indicators, what are they?
Well, I think overall, for us, we teach the algorithm numbers, right? Algorithm numbers are super key in determining what direction the markets will move. So, and when we say algorithm numbers, these are specific price points that we watch, because not all the digits are created equal. So you have things like the whole number, the 10, 25, 50, 60 is actually looking pretty strong lately, and then 75, 90, and then the whole number again. And so these numbers, they serve as certain magnets, and hedge funds have been utilizing them, I would say ever since creating like their existence to identify, right, as the number one thing, like, hey, is the market going to basically break this point, or is it going to stay, because it's hitting resistance. So we call these algorithm numbers, right? And we specifically go into them, when we educate. But basically, certain algorithm numbers are a heavier magnet than others, right? And so if you know exactly how the markets interact with these numbers, that's going to do you a huge favor. That's number one, right? Number two is making sure that you have the right moving averages plotted, okay? So we use at least 3 different moving averages, and you want to, because the way that they separate and what I mean the way is like how wide they are, right? If you see a huge gap in these moving averages, then, it tends to tell you, hey, a trend is happening, and the market will probably be in, for a little bit. Now, what you want to also do is you want to confirm, if that trend is going to be a long trend or a short trend by referencing other charts, like the other charts that are longer. So we tend to use the 1 minute for precise entries, but you want to reference the 3, the 5, the 15, the 30, and the daily charts to get an overall picture of what's happening.
So it's sort of zooming in once you kind of see the
and then obviously I'll be getting a little bit more technical if I use these terms, but like there's indicators known as the MACD. That's proven to be a pretty good one to look at alongside, the standard deviation lines to kind of help give you additional boundaries of the markets. But I mean, you don't just learn all these things in one. So I would say the most important ones, because we teach 5 to 7 factors minimum, right? And only when they're kind of all there do you want to really enter in a trade. So the number one important thing for us is the algorithm numbers. There's also specific reversal numbers, reversal times that, according to how the market flows, that will probably reverse. That's number 2. Number 3 is, I would say, candlestick patterns as well. Knowing your candlestick patterns is really huge. Knowing your moving averages and how they interact, right? That's another one. But then also on top of that, you have, I would say, the interrelatability of markets, right? Like knowing that when you trade the YM, the NASDAQ also has implications on it as well. Yep. And then the last but not least, federal reports, right? Because if you know exactly when a federal report will come out, that can greatly influence volatility. We had one of our biggest days where we made 437K in that afternoon. This was actually a year ago in February. And the reason for that is because there was a huge federal report that came out and they usually come out on Wednesday afternoons, right? Now you need to understand, one federal report is it's almost like 3 days worth of trading, because that's how much more volatility you see.
Does the volatility happen right then, or does it happen the next day?
No, it's right then and there. So like that 1-2 hour span, like you talk about efficiency, that 1-2 hour span covers like 3 days worth of volatility of like 3 regular days, right? So knowing and how to identify federal reports, right, which we teach as well. Some of our clients, they're just like federal reports traders. They literally only trade the reports. So they do the most amount of work. They don't even do the half an hour to an hour and a half daily, That's hilarious.
Yeah. Now, speaking of federal reports, me being from Canada, you being from the US, we got the big T word happening between us, the tariffs. How do you see that playing out in the commodities of the oil markets?
That's a great question. I mean, like I said, I think that's going to be more like leaning towards the fundamental analysis standpoint again. Again, like I said, for us is, to be honest with you, I know where your mind is going, but it's like a lot of things can be happening around the world, Steve. But as long as you can diagnose the charts, I'm telling you, like it helps to know, oh, if this goes up, this might go down, right? Overall. But what I'm trying to tell you is because in this specific game, we're trading the oscillations, your number one job here is being able, it's like no different than, can you go under the hood of a malfunctioning car and be able to go, the reason why this is malfunctioning is because there's a leaky thing here, and that's all you're doing, every single chart, So what I'm trying to express to you is, like, this is a perfect example of how irrelevant fundamental analysis questions like that are to the skill set of technical analysis. Because if you have that down, it does not, like Steve, this is why people make money. This is why commodities traders and futures traders, we're literally impervious to market collapses and economic cycles if you have the right way of approaching it, or you have those skill sets, right? Because it's just about reading the charts. As long as you go, from what I'm reading, I can see it's about to fall for the next 5 minutes. I'm going to put a short here and bam, you're in profit, right? From what I'm seeing, oh, market's going to go back up. Those questions is like, oh, well, there's terrorists or there's like, we literally go, what's the chart telling you? You see what I'm saying?
So there's nothing outside of really what you're saying, because what I'm saying is I'm looking at the sun circling the galaxy, and what you're saying is I'm walking across the street, and I'm going to make money walk because it's so precise at that moment.
That's exactly. But how, now, please do not take my words out of context. Fundamental analysis does help, right? And the more you know, the more profitable you probably can be. I'm saying it is not a prerequisite. I'm saying that like you do not need to know that to be profitable here. The main thing that you need to be profitable here is robust technical analysis skill sets, right? So that's why, for us, literally our market morning prep is like 2 minutes. We're literally looking at, how the charts are related to each other, 1, 2, 3, 5 minute, 15, 30 daily. We're not on, CNBC. We're not reading the news. We're not looking at, like I said, quarterly earnings. You see what I'm saying? We're not looking at, political, administrative policies, right? And bureaucracies and how that could come into play. It's just like, okay, like, what is the chart telling you? You know what I mean?
That's amazing. Yeah. No, that totally makes sense. And when I was doing the trading, I tried the chart thing, but I never really had, I think, a really good direction on it. And then I went to fundamentals and I never really had a good direction on it.
Well, I think because...
And then I went, I'm just going to get out of this and go to real estate because I don't understand.
No, I'm with you. But here's the thing, Steve, right? Like you were probably doing that with the wrong asset class. So you said you were dabbling more so with stock options, right?
Mm-hmm.
Stock options is also great if you have the technical skill sets, but fundamental analysis matters more with stock options. So with stock options, it's a little bit more of a blend. The technical definitely works, but like it's very helpful if you know, because stock options inherently is options off of stocks, which is options off of companies. So knowing why certain things and how they will move, according to the research and the news, right? And the government policies, that will be of a greater advantage as compared to commodities. So for you, like that, you need to have a blend, a little bit of,
yeah, and then when
here and there.
Totally. And then I did play a little bit in the Bitcoin, like the crypto market, but it just was not me. Do you play in that space?
Yes, I was really happy to discover this recently. So I did make I made a couple of grand on Bitcoin, like way back in the day, buying and holding, right? But within Coinbase now, there's a setting called Advanced Coinbase. And I think we get access to it if you're a Coinbase One member. But this is again where the technical skill set comes from. So when I get the time I'll be actually night trading with my team members. Because during the day, I'm busy, with the business. But here's the thing that I've noticed, and this is why it's so true. Like, we always talk about the firm, how when you get trained as a futures and commodity trader, you can trade anything else, right? But it's hard to say that the other way around. And the reason is because you're so used to the speed of futures. So I literally looked at the Coinbase One advanced settings, and I was like, dude, I was like on the phone call with my team member, and we were just reading the markets, and we were like, oh my God, like Coinbase, Bitcoin, and Ethereum specifically, they are very trendy markets. Like if you actually look, the only two indicators I have on is the MACD and the EMA, the exponential moving average, out of all the ones that they provide. But if you look every 15 to 30 minutes, they have great trendy moves. So literally within an hour and a half, Bitcoin moved like 1,500 points. Now we were not 100% sure what that means. Like what does a point actually translate to in terms of dollars? Because I don't actually do that on a daily basis. But in terms of short-term trading, if you know how to short-term trade futures and you have that skill set, you can actually make quite a bit of good money from night trading in Bitcoin. Just because Bitcoin is a very, like, it doesn't have single candlestick patterns. So what I mean by that is you don't see it doing this.
Yeah.
It's very, like, it may wiggle in consolidation, but then it'll go up and then it'll come down. It's like, it's very beautiful in the sense of like, the overall flow. You know what I mean? So I actually have been pretty excited to trade Bitcoin and Ethereum short term. We're like, again, similar to how we trade futures. We're not buying and holding it overnight or over a week or over a month. It's like in that, 15 to 30 minute period, when are we going to go in? We get in, we hold it for that little trend, and then we get out. But the charts are very reminiscent of futures, but the benefit is the charts move slower. So you can read, that's why it's a little bit easier to read, you know, because it's not like doing it at a much more, I would say, intense pace than you would see in futures.
That's so interesting. Yeah. Yeah. I do have a Coinbase account. Maybe I'll go take a look at that and see that one again rather than crushing some Netflix.
Yeah.
Crushing
but I would say before you do that, if you want to just hop into, and for the listeners as well, if you want to actually have some robust knowledge behind you to like understand what's happening, you can feel free to stop by. You know, like I said, we host typically paid client sessions at night for an hour at night where we teach. And then in the mornings, we actually go live, we prove what we teach, and we clear someone's annual salary in front of you. So
if somebody wanted to see that, how would they sign up for something like that?
Yeah, I mean, just message me on LinkedIn, you know, under Philip Jayhawk Chan, and let me know that you heard about this opportunity from the Money Mindset Mentoring podcast with Steve, and I can make sure I connect you with one of my team members. And what we can do is we can identify the best 2 weeks that works for you, and I can grant you a complimentary guest pass, right, at zero obligation. And so that way you actually see how this works in real time, right? And you have that background knowledge.
Yeah. Yeah, that's probably the biggest thing that I missed when I was doing it, is I was truly betting on black or red and then losing it to the green on the roulette board. And because I didn't have that knowledge, I didn't have that person who was going to give me the advice. I was going it alone. And I think most people, when they go to something, they always want to kind of make it their own path. And I think it's so much easier for you. And this is something that I learned. I'm Dutch, wouldn't head, wouldn't shoes, wouldn't listen. And so, you know, you always have that mindset, go alone. But the more that you can, you know, involve other people who've done it with you, they've done it before you with you, and they've done a very good job. Why not just get the hall pass to the front of the line and be successful? And I think that to me is the best way of doing it. So guys, don't do what I did, which is just go blow some money on the market and they go, meh. You know, I mean, it was just a vacation worth of money. I mean, it wasn't really a lot, but, you know, heck, that was a missed vacation. So, Philip, man, dude, it's obviously great time chatting with you. I'm excited to seeing you at GrowthCon.
Yeah, man.
GrowthCon's
last GrowthCon.
Okay, that's the last thing we're going to say. Do you think it's going to be the last GrowthCon?
So, I don't want it to be, like, personally, but I think we have to accept that it is from what I'm hearing. Because I've done my due diligence. I've talked to a lot of people. I've been part of the TEDx community since like 2017.
Yeah.
And
talking with the inner community, they're saying,
yeah.
When they're talking to the inner community, they're saying it is.
Yeah.
You know, because the mathematics around it aren't as good as some of the other events.
But also, Grant's getting old, you know, and it's like the 10th and final GrowthCon at 10x, you know, so like they wanted to.
Yeah, that's it. I mean, there's some magic to the numbers on that.
Yeah, because he's like what? He's over 65 now, I think, right?
Yeah. Well, you know, like results, you know, like success, we'll just wait and see who's right. I think we're both saying that it's probably the last one, but you never know. With Grant, he said it's the last one unless I think differently is what he said. So
I personally don't. I do, because if it's the last one, at least I'm like, make it be in Miami, man. Let me have my.
Well, that's what I thought too. I wanted it in Miami as the last one, but
I'm not the craziest on the strip.
I know. I'm in Vegas. I'm in Vegas next week for a family reunion. And then next month for GrowthCon. So,
okay.
Yeah. Awesome. Well, dude, it's been a pleasure. And guys, this is the money. This is the mindset. This is the mentoring podcast. Thanks so much for joining us. We'll see you on the next one.